Good morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 22nd of June 2023, just past the winter solstice, which means the days are starting to get longer in Melbourne. We're happy about that because it's very cold down here and we always look forward to the summer, despite living down in Melbourne for some strange reason. Okay, special offer, first things first, is out now. 3 months for any new subscriptions at the moment, 12-month or 24-month subscriptions. You get plenty of free months there. So now's the time to take up the opportunity to do that before the end of June. Okay, just briefly going over what I do. Our mission is to follow trends, okay? I use two simple triggers. One is the new high and one is the trend reversal, okay? You can use Stockradar's portfolio service to follow those, either or both, whichever way you like. So there's the full gamut of offerings there for you. So don't forget also our free blog full of articles on discipline, processes, probabilities, portfolio management, risk management, all those sorts of things. So we also have newsletters, stock alerts, all that sort of business as well. So we try and provide the full gamut, as well as a unique trading centre, which provides all our stocks, stop losses, entries, exits, trend intensity ratings are all there for you to see. And this week, no real trading tactics, just a little bit of discussion on simplicity again. You know, we talked about these buys the last few weeks, which have been quite a load. And try to get a handle on all these things, because I know we're all affected by this, is quite hard. So clarity of mind is the best thing. You know, shut out as many things as you can and focus on the job at hand is really the best advice I can give you at the moment. Okay, so just going across here to the top 10. When I first started off the first screen there, I mentioned the market's pretty good. In fact, it's not that good because we've only got 49 stocks out of 183, but we do have stocks like, some of these stocks that are moving well. Some of those commercial services stocks, which I look at in the newsletter next week, are going well. I've got a few individual stocks like AGL, Telstra, doing pretty well. Pro Medicus doing pretty well. So there's certainly some stocks there that are doing well. So we don't focus on the ones that are going down because it doesn't really interest us much, and then the ones that are going up. So it's always a bull market at Stockradar for most of the time. Okay, so there's the top 10 there. AGL's at the top again, no surprises there. It's just gone bang, bang, bang. Brickworks make new high. Car sales is outperforming Seek Enria at the moment for some strange reason. That's a little off-the-shelf one, that one there. James Hardie's returned to favour. NHF is just another insurer. I'm going to look at some insurers later on in the stock that I look at. And we've got other ones there still, Seven Group making new highs, WiseTech and XRO, Zero also doing very well there. So there's the top 10. For you. So let's go to some markets straight away. Dow Jones Industrial Average. Well, I've sort of shortened the time frame we're looking at over here back to about 2 years ago, and so we know the big rally we had up here. But this is what we've been seeing in the last couple of years, and we are really in a standoff stalemate position because we've got the sellers here are kicking down this index. The buyers here are supported here and now starting to push up. So we've got an interesting standoff here. We've got some rallies which keep failing, but the buyers are still holding on and increasing their limits. So that sort of suggests buyers are strong. So we've got two sides of the story there. Remembering we are above a significant high, and that's a big resistance level to get through. So plenty of work to be done yet, but quietly confident. We've got some nice volume that kicked up the last rise. Momentum's just turned positive, so we have got a sneaking chance of moving higher. So we'll just have to keep that week by week at the moment on the industry front. S&P, we know, has been very strong. It's broken out. Its next main resistance level is up at 4,700. Volume's been good, momentum's been good, so we see no reason why this wouldn't continue higher. We've had a bit of a correction. All markets have pullbacks. Let that happen because it's all healthy for those sorts of markets. Okay, so that's the S&P, which looks fine, as does the Nasdaq. It's broken nicely over. Some excellent volume there. We've got stocks like Apple making new highs, and there's another one there, I think it's Microsoft. Is also about to make new highs. So, and some of those stocks are starting to recover, the Amazons, Googles and Netflix, from a long way down admittedly, but the interesting ones are Apple and Microsoft. Microsoft is just an amazing stock. It keeps going higher, but the Nasdaq is pushing high and looking very good at the moment, so we've got no reason to worry about that at this stage. Commodities a little bit different. Gold still tempering those gains at that 2,000 level, sort of struggling a bit this week to hold it. It's not over yet, but we'll just have to sort of wait and see. There we are in the top of the range here, and the likelihood is now going to start falling down from here if we start breaking below the average in this trend line. And this last little bastion of support here at about 1944. Okay, so that's gold. It's not looking that flash. Copper's trying again. Still no uptrend there to really talk about. It's a bit of a standoff again. We've got a low here, a high here. They're all converging. Another low here. So we're getting a little bit of a standoff here again. We've got some good volume again on the buying side of it. The last rallies in the Dow and the copper and things are all showing some fairly interesting buying here. So it's encouraging without us getting too overexcited at the moment. So just again, it's a monitor situation as far as trends go on those ones there. Okay, Brent crude. It's got actually a real stalemate, this one. It's really just hovering along those lows there, not doing much at all. Unusual for Brent crude to be doing that, but it is. And for the moment, it's struggling just at that sort of that $75 level. There's no volume sort of two-way. Momentum's pretty weak, and really the pressure is still down here. So don't take your eye off the ball here. There's no doubt about it. The prices are going down. So that's where they stand with Brent crude. Excuse me. Okay, must be a Melbourne cold getting to me. Okay, ASX 200. Again, we had a little bit more of a closer look at this one, especially the last couple of years. We've seen this big down move here, which was a real erosion of growth there for a year. It wasn't very pleasant at all. But we've had the rally back to the highs. We've pulled back. We've held at a higher level. The rallies are starting running short, and all of a sudden it looked like it was going to be pressure on the downside. It's now starting to try and break up again. Momentum is just above neutral. So, we're quietly positive, but we are above a big resistance level. So, we have to respect all those things at the moment. And again, it probably is a bit of a neutral stance basis, that index at the moment, until we break through those highs at the moment, because this is significant resistance that just hasn't been able to plough through as yet. Eventually it will, because the stock market trends higher over time. So eventually it will. When that happens, we'll be there with all our stocks that are giving us signals. Okay, so that's the ASX 200. What I just want to go back to quickly now is the portfolio count. Or the stock big count, I should say, where it's down 1 this week to 49 of 183 stocks and ETFs covered. So I have 40 stocks of 160 stocks covered. I have 9 ETFs of 23 ETFs covered. So really that 40 out of 160 is still not a lot. And there's a bit more encouragement in the leaders there, but no one's really doing anything at the moment. So we just focus on what we've got at the moment and what is doing better, I think. First off, though, I want to go to one stock, which is probably of interest, which I'll cover you off in a second. I'll just go through the portfolios first. The Conservatives lost 1 this week. We're at 35% equity, 65% cash on that one there. The Energizer 5 stock is 4 out of 5, so it's lost 1. The Energizer 10 stock is 8 out of 10. Haven't had any real qualified entries for the portfolios the last couple of weeks, and we've lost a couple there, so we're still waiting for those ones to be replaced, which haven't been done as yet. The Energizer 5 stock, August 20 we started, is 5 out of 5, so that's still full. And the March one we started in March 21 is only 3 out of 5, so it's only at 60% in equity. So a little bit of a varied picture there. So some of the stocks, when the signals come up, they qualify for the portfolios that week. Some stocks don't. So it will vary as to whether we have AGL in one portfolio, or XRO in another portfolio, or not, or one in neither of those portfolios. So that's all a bit of the luck of the draw on that. But we play those odds over time, and you will get the big ones at some stage. So that's the portfolio update. For now, up till the 19th of the 6th. So let's get into some stocks. BHP, which I thought we'd start off with today. That's my mouse gone. Okay. BHP. Here we are. Okay, so BHP, well, for the last 2 years, since 21, we've had a bit of a rally since the lows of 20, which we can see there. And if we just blow this up a little bit more, we can see we've got the good high lows here, which has been pretty impressive really since that low March in early 2020 after the COVID crash. It rose straight back to the highs. Since then, since September, it's gone sideways for nearly 2 years. We've had a bounce down, test again, 3 tests. These all lows. This is high lows, which tells me the buyers are stronger over time. They're keener than the sellers. The sellers are just sitting up there flogging the stock when it gets to there, and they are winning at the moment. So that's not to be ignored. But up till now, we still have some good volume here. Sorry, some good new high lows, pushing hard at this. And here there is a bit of volume here. I know we've got a big tick here which squeezes that down a bit. We might just have a little bit of a look there. You can see a bit of volume here which has appeared just since it hit the bottom here, and a rally here. So it's going to have a try, and the momentum's come back to zero. It's just starting to turn around a bit there. So Again, interesting situations, but we can't give a buy signal or a sell signal on BHP, although we don't give sell signals, we just turn neutral. But there's no buy there until we see that level break at the highs there, which is above R1 unlocks blue sky, which will be a new all-time high for BHP. And if that happens, with what's happening with commodities at the moment and the excitement around those commodities, may well be a very, very interesting move for BHP. And you can look at Rio and Fortescue in those charts. You can go to Stockradar to have a look at those stocks, see how they're looking at the moment and what we're doing on those. But there's slightly similar pictures for the moment. Okay, now... So this week, so that's BHP. So this week I'm going to look at a couple of insurance stocks and some trends which we've been following, some from last week and a couple of new ones. It's just really the stocks that we've got and are following, they're making money. So there's no really need to change anything or add anything or sell anything at the moment because they're doing very nicely for us and they're doing the job, especially as there's not a lot of stocks going up from our covered stocks at the moment. So BHP is one stock worth watching. The one that I did look at last week was Telstra, and it's just piling ahead nicely, not piling ahead, but grinding ahead. What's the word? I'm not too sure, but it's certainly going higher. It had this rally. It had a nice healthy correction. It's now had a rally. We've seen some very good volume come through here. A bit of selling which slowed the rise a bit, but the buyers seem to be back and pushing this stock higher again, and momentum is positive. So although selling is evident, the price still rises, which means there's been positive absorption of that selling by the buyers, and the price is making new highs. So that's a very good sign for Telstra, and it just trends well, this stock. So hopefully this trend will continue for a while yet. A little bit of yield there to offer you, so certainly worth your trouble looking at Telstra, roaring on Mr. Telstra. Aristocrat we looked at last week, and we saw how it had been struggling a little bit, but we were talking about the trend intensity index and using the trend intensity index to make sure if it's valid, then we hold our position and take confidence in our position. And what's interesting, we just see this week, it's just started to jump up a little bit higher, trying to get out of that little bit of trading range that we've been holding it back for the last couple of weeks. So trend intensity rating is 8, and it's looking okay, and we can see the buyers down here are starting to return to the fold here a little bit, and momentum's positive. So that's why your trend intensity rating is 8, and it's still above the average. So all signals are good for Aristocrat, so hold that stock. Okay, now car sales has been a little bit of an outperformer in the internet sector because Seek and Rare have both fallen foul of stock pick status at the moment, but car we still hold here, and it's also been moving up quite strongly. A little bit of an individual situation possibly here, I'm not too sure, but who's for me to argue? I just would follow the price, and the price is going up, and all the signals are good here really, because there's good volume been coming through here. The momentum is steady, without blowing the lights out. The moving average is hovering above the moving average nicely. So I'm sort of looking quietly confident this is sort of an area we can get to without too much trouble, up around $26, $65, $27 for carsales.com. A jumpy one, I know, but we hold fire with that one, and it looks pretty good. Okay, AGL, which has just been a little slow burner and all of a sudden has come to life. It's just been whack. It's now above $11. I don't know what it's doing today. It's probably come off a little bit, but it just has been a rally, 20% in a few months in that stock. It's been amazing. Just that simple trend reversal pattern, and we take our signal when the highs break here, and we get some good patterns here. We had some great volume appearing. Momentum's all been good. So it's one of those ones where you follow. If it works out, well and good. If it doesn't, you get stopped out. But in this case, the chances are it was, and so far so good for that one there. And stop losses are always set in these things to make sure we protect what profit we do have and we don't let it go away. So that's AGL, which has been doing very nicely, thank you. So there's a couple of trend reversals there for you with car sales and AGL. Now we're going to look at a couple of new highs. Well, I'll just go back to Goodman Group, which is also a trend reversal. An interesting one because the property sector's been all over the place with some of these stocks. Because we did buy a few months ago, and we've got stopped out of a few, but there's been a couple like Mirvac and Goodman that are performing okay and still holding. And this is really starting to challenge this recent hype around $21, which is looking good. So we're hanging in there for the moment. It looks good. Volume is okay. Momentum is just positive. It's just above the average. The trend intensity is just holding at +7. So we're just sort of there on the precipice and hoping we might get a little break up. And it's been sort of encouraging this week. We've had a test of that level for Goodman Group. So keep following that one. It looks okay for me. Okay, insurance stocks. Talking about new highs at the moment. QBE's been a nice little entrance for us, And again, it's up about 20% since we entered this one, which was back here in November last year when it broke above this big corrective pattern here. It was holding the price down. It made a new high above here, and it's rallied pretty quickly to the highs. It's had a bit of a corrective phase over the last few months. It's now starting to move higher again, as are a lot of the insurance stocks at the moment. So QBE, it's been a very good entry for us, and it's still holding. And this is a very high. This is a 7-year high we're breaking through here. So this is becoming significant. So the sellers keep knocking it down, the buyers keep beating it up again, and they're back again trying to make new highs this week. So that's a really good sign for your QBE. Okay, so we'll keep an eye on that one. Steadfast is another one which is doing really well. NHF Holdings, which I've shown you a few times, it's just had a vertical rise on great volume and great momentum. I don't know what happened on this day here back in March, but something happened and this stock is just well in demand. 10 intensity rating of 10, you hold this stock. Our stop is here to protect our profits at the moment, but it's looking very good, NHF. All-time highs for here, buyers are back, momentum is strong, so it could be like AGL, whatever. It's just a very good picture. No wonder we've got a almost vertical rise. It's gone from about 680 to 880, so that's $2 in a few months, which is pretty incredible. So good on you, NHF, good on you, insurance stocks like QBE making new highs. And I mentioned Steadfast. The other one, finally, we did have a chart. This one got really beaten about for a long time, Insurance Australia. And we did have a little attempt down here buying this one. We got stopped out, which is fine. But now we look like we're getting another new high above this level here, which is up around 545. Trend intensity rating will move to 8 on this break above here. This is a good buying in here, and the momentum is strong. It's above the average. So at the moment, it's a trend intensity rating of 8. It may well get a trend intensity rating of 10 next week if it continues on like this. And really, it's got quite a lot of potential upside because it did have a big downtrend there for a while, from a long way up. And it had a big accumulation pattern. So this is a big supporting base to build off for Insurance Australia to start lifting higher with a bit of confidence, I think, now that that's all behind it. So I know the world's full of calamities at the moment, but these insurance stocks get their premiums rising nicely above the cost of calamities, so I guess they're making money, which is a good thing for people who hold the shares. Okay, so that's the stocks I want to go through today. Commodities I talked about last week was also another stock which is looking interesting again. It's starting to make new highs again, which is fantastic. So for those of you that missed it, there's another new high opportunity happening here at Commodities for the moment. So that's what I looked at last week. So McMillan Shakespeare is another stock which is off my radar totally because I don't cover this stock. But I just thought all stocks come up in my scanners, whether they're in my group or not. And this was just one that came up in my scanner recently because it's been rising very strongly. And when I look at a chart like this, it tells me that maybe something's going to be happening here. Now, I'm not concerned about price levels. That's the buy on weakness trade. I like momentum. So new highs are always good, and I'm not concerned about what's happened previously. The fact that it's come from $6 or $8 and is now up around 17 or 18 doesn't bother me at all because I know what stocks can do if they want to. And that's some interesting things. Now, McMillan Shakespeare, we've seen this rally before. We've seen a rally like this before, and it went bump, failed, and came right back again. So just be aware that this is not a signal to buy this one, but we're saying we're getting to an interesting position here. And if I just blow this up, we can see that's a 10-year resistance level there. If I just blow this up here for a little bit at the moment, we can just see we've broken through this resistance level here. We're in this big trading range here, which we're lifting off, and we're probably going to track back to the high of the trading range, which is what it has done. Now it's at the high of the trading range. We're going to make another decision shortly when it breaks through. Now we've got our reasons as to know why we buy, so we know what to buy. So when the whys happen, we will do it. So for the moment, we've got very good volume showing up down here. I'll just put a little green bar there. You can see that it's quite a good volume pushing this higher. Momentum's been very good. It's above the average. And the price action is very good because we've just broken through this resistance level here, which means we're about to go and test this level at $18. And once we get through $18, if and when we do that, that provides a whole new opportunity for McMillan Shakespeare. So if I don't know if there's you guys analysing this stock out there and you like the stock or you think something's going to happen to the stock, but it's certainly worth watching to me, McMillan Shakespeare, because just because of the price action, nothing more, nothing less. And we've got some good supporting indicators down the bottom here, so that's a good thing. Okay, so as I said before, we don't need a lot of stocks to make our money. There's some good stocks in there. We have conviction in what we do, and we don't carry a lot of stocks just because we want to carry them for the reason of diversification. There are many more stocks moving higher with strong TIs at the moment on the Stockradar website. We've got 40 of them at the moment. So sign up for a free trial and go and have a look at the Trading Centre, and which is our premier page there, which covers all our stocks. Okay, trading tactics this week. I'm just going to cover the follow the trends. It's very simple things there. What's happening at Stockradar at the moment? Well, purely we've got the offer on at the moment. If you take up a 12-month subscription, you get 3 months free. You take up a 24-month subscription, you'll get 4 months free. That's the deal till June 30th. So if you want to take it up, now's your opportunity, because I think this market may well be starting to move in some good stocks in there ready to go. Okay, just quickly on trading tactics, it's just really more about restating the position that I do, just to clarify for everybody. There's always little differences we talk about, and I have been talking about biases the last few weeks, which has been a bit of a heavy load. But just to go back to what we do, our mission is to follow trends. That's all we do. Jump on trends when they appear and follow them until when they stop. And the trends occur all the time in the market. It's just a matter of having that ability to get on and get off when you should. And that's just a discipline thing. Okay, the triggers are new highs, which is why I buy momentum. So for the other traders, the buy weakness traders, there's a trend reversal, which usually occur from the lows. So that's trying to cater for everybody. You can just do new highs if you want. You can just do trend reversal if you want. Either or, whichever one you like. But what you also must do is you must have a backstop every time you trade the market. Why? Because you must risk manage each trade and make sure there's only a certain percentage risk which suits your profile on any one trade. Okay, I know what mine is. I know when mine's set, and that's what I live by. I don't like taking losses. It takes a long time to get back from them, so I limit my losses. I would rather say I'm wrong, get out and move on and wait for another opportunity. Profits are there to be taken when they're ready. So you've got to risk manage your profit on each trade so you can get the most out of it. Trends often go on for longer than we think, especially the bigger trends or the good trends. They're the ones where we really make the money. Okay, the ones with unlimited potential, but you need to have a lock-in profit method. What is your lock-in profit method? How are you going to do it if a stock rises? When are you going to get out? So same as knowing why you buy, you'll know what to buy. Knowing why you sell, then you'll know what to sell. So that's a very easy argument. So the simplicity is my greatest advantage of what I do. I don't complicate things. I don't have exceptions to the rule. I don't use other forms of analysis. I stick to my knitting, and that's what I do. And it works, and that's fine. Okay, so I have conviction in what I do, and that's how it works basically. You must have confidence and conviction in what you do and not doubt yourself. You have to play the game with vigour and be strong about it all. Okay, so that's really all I've got for you today. Okay, a few stocks there. Some simple rules built around the simple summation, so you can do this. You can act. So you search and act for your stocks. Then you must be patient with what happens, let things unfold, and you must have a backstop and a profit stop. Okay, otherwise you will not know what you're going to do. That's the easy way to trade shares. Don't make it more complicated than it needs to be. It is a simple thing to do. It is simple if without it be. Okay. So that's about all I've got today. The market's looking interesting at the moment, so the newsletter will be out next week for you to have a look at. And that's about all. It's cold in Melbourne, and I'm not enjoying it too much, but anyway, that's the way it is down here. So stay safe, watch your trends, heed your stops, give me a call if you need any help. Stay safe, and I look forward to seeing you all again next week. Thanks very much.